Hey, I'm at the 2026 ICSC Las Vegas conference with Paul Kurzawa, president of Centennial Real Estate, and we'll be talking about some of the biggest trends in the retail investment space. Paul, thanks so much for taking the time to speak with us.
Thanks, Gabriel. Thanks for stopping by.
Of course. So, what impacts are current market conditions and macroeconomic trends having on the sector, particularly this investment space?
Well, look, from a consumer standpoint, we still see the consumers being very, very resilient in the market, given the headwinds with, where we're at with the economy, the uncertainty politically, and also, rising gas prices. But with that said, we're still seeing customers at the malls. Our traffic is steady. Sales are up, which means that we've got guests that are coming and they're staying longer and spending more. So the fundamentals are actually pretty good. And on the retailer side, I think the sentiment is still pretty strong. Maybe a little bit of cautious optimism, but things are looking pretty good as we hear at ICSC this year.
Yeah, got it. Is a more disciplined lending and capital markets environment impacting deals in any way?
Discipline's broad. Look, I do think that certainly there's probably two words that come to mind. One is a little bit more creativity, and maybe a little bit more of an aggressive approach to underwriting for those deals. I do think the capital markets are more keen to look at deals a little bit more closely, that perhaps they wouldn't have done this time last year. So that's certainly come back. The debt markets have come back as well. So that's kind of created a situation for more deal opportunities. I think the pipeline is improving as well, but also on deals that are a little bit harder to underwrite. So it's a little bit of an interesting paradigm right now. There are deals out there, a little bit harder to get. Discipline, look, I mean, I think there is on the capital side a desire to still be somewhat conservative. On the investment side, there's still a lot of money sitting out there. I mean, over the last day, I've had several conversations with capital partners that are like, look, we're sitting on money we need to place. So I think again, from both sides, there's the willingness to come together. Hopefully in the next 6 to 12 months, we'll see a lot more of those deals being done.
For sure, for sure. And on the ground, what are you hearing from retail tenants, and how are they viewing these physical spaces, kind of in light of these larger trends?
Yeah, look, I mean, again, like I mentioned before, I mean, the fundamentals are great. I mean, retailers are still out there doing deals. We've had a great conference the last 2 days, with a lot of great conversations with existing retailer brands, new retail brands that we're looking to bring into the portfolio, and that just speaks to the confidence in the business. Again, despite some economic headwinds that may be out there, and maybe they eventuate into something, and maybe they don't. So the sentiment's good. There's still investment that's happening in retail. And look, I mean, I was on a panel yesterday. I made the point that when you have Macy's and Bloomingdale's, Walmart, Target reinvesting in their store experience, when you've got Barnes and Noble looking at opening new stores, I mean, this shows strength in the business, and the fact that there's opportunities going forward for more of those sort of deals. So, I mean, I think it's been a good year this year so far.
Certainly, certainly. And how do you determine what constitutes a worthwhile investment?
Well, one way you're going to make money,
Yeah,
not to state the obvious. But look, I mean, I think a lot of it has to do with the investment thesis of the capital partner that you're working with.
yeah,
If they're looking for more core returns, then you're buying something that is going to return that you maybe have an opportunity to remerchandise into and to continue to grow the cash flow. And then there's the other side of it, which is value add, and that would be, buying a piece of property at the right basis and, looking at densification and redevelopment opportunities. So it really depends.
sure.
But we're across all of that, and we have capital partners that are looking for core, we have capital partners that are looking for value add, and we're trying to chase those deals at the moment.
Yeah. Are there any subsectors of the asset class that you feel like investors should be paying more attention to, maybe in the value add space?
Look, I mean, the one that's always been kind of there because there's a decent amount of supply of it, and that is the enclosed mall, market dominant regional enclosed malls. Certainly ones that have had a department store or two close. Maybe they've got a high vacancy rate. I mean, that's where a lot of the value add opportunity, comes in if you're able to buy it at the right basis. But again, it really kind of depends on what the investment thesis and the return targets are.
Sure.
Grocery anchored still is the darling of the business, right? And if you can find the right deals and you can get them done with a little bit of upside on the leasing, they're a good investment as well.
Yeah, there's this mix of these optimal strategies, but also more of a room for creativity than you'd see in some other asset classes.
Sure. Well, then that's the great thing about retail, right? Because we have the power to come in and kind of create a re-merchandising strategy based on the current consumer profile and also the customer demand, right? Now, and so in some respects, we can control that, which is the beauty of our business, because then we can attract a customer that's currently not coming to that retail destination, which is driving a new customer, but also, incremental spend, which is again translating to value.
Yeah, wherever you can find it, even when it comes to those more human elements.
I wish that there was one model that fits all, but there isn't, and that's the way it should be, right? Because it's a very dynamic business, and and that's how we've curated our centers, the ones that we've acquired over the years. So we're excited. We recently announced the sale of Annapolis Mall to Macerich, and that was an incredible investment for us. Space of around 20 months. We were able to come in, lease over 500,000 square feet of space, together with our partner Atlas Hill, having the right capital partner in Kildare. And it was just, it's a really great proof point in terms of coming in, with purchasing a property at the right price, being able to reinvest capital to execute on a merchandising strategy in a relatively short space of time. And it's just another proof point of the strength of the business.
Yeah, it does sound like the picture perfect investment, especially in this environment.
It was great.
Oh, Paul, it's been a pleasure. Thanks so much for taking the time.
Good on you, Gabriel. Thank you.